I toyed with the idea of adding a new ETF to this series last quarter. Well, FDVV left me no choice. It's officially in the mix, and oh boy, did it come out swinging for the fences. And truth be told, I've been tracking this fund for over a couple years now, unofficially. Its total returns since inception have been eye-popping, but early on, the dividend CAGR was nothing to brag about. Well, forget that noise. FDVV has been quietly improving its dividend growth stats. And this quarter, it put everyone on notice. In this video, we'll see how it stacks up against our longtime contestants of SCHD, VYM, VIG, and DGRO. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please clothesline that like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. Quick note, if you're serious about leveling up your investing research, don't sleep on my two favorite tools, Seeking Alpha and Snowball Analytics. A free trial to either one is linked in the pinned comment, and these are the same tools I use to put together videos like this one. And I'm not sponsored by either one. In fact, I have made $0 from sponsorships on this channel lifetime by design. These are just my affiliate links that do help support the channel when you use them, and I appreciate that. But most importantly, it saves you money, especially during a big sale. So wait for the juicy sale, hook yourself up, and give your boy a kickback. You know what time it is. Let's grow. Quarter 3 Dividend Growth Scorecard. Before we dive into the data, let me set the stage a bit here, because the origins of this series are kind of random. A while back, Seeking Alpha had some dividend data wrong for QQQ of all things. I built a spreadsheet with formulas that made it easy to track and flagged it for them. Sure enough, they fixed the problem in the next nightly update. But then it got me wondering, are all of my holdings showing the proper data? So I did what any nerd would do. I expanded the spreadsheet and started tracking everything myself. Now, each quarter, I can confirm that the Seeking Alpha data matches my sheet anytime a new dividend drops. And just for the record, they all have. And that's when the idea for this series was born. I already had the data, so why not share it? I started with my favorite long-term dividend growth ETFs that are all proven and have at least 10 years of history, and that was SCHD, VIG, DGRO, and VYM. And then this quarter, and I don't do this lightly because I want this to be a focused series, I decided to add FDVV to the mix officially. And as many of you that watch this channel know, when it comes to dividend ETFs, my three primary key metrics that I really care about are yield, you gotta have some yield to pay the bills, dividend growth rate, you gotta smash inflation with your purchasing power over the years, and then long-term total return. We don't just want a yield trap that pays these juicy yields and then sees the NAV erode. And in this series, we emphasize dividend growth on the scoring system to crown a quarterly winner. That's why SCHD has dominated the past results. Its CAGR has been far ahead of the pack. But in this quarter, things got a little spicier. Let's see who takes the quarter 3 crown of 2025. I bounced out to the ETF dividend growth history spreadsheet that we've historically kept for these 4 contestants. And holy macaroni, we have a new challenger that looks like it's at the top of the charts. Now, I'm going to show you how crazy this is. I have been tracking this one for a couple years now, and its dividend growth has left a lot to be desired. We will get into all that, because it's probably hard to believe when you're looking at it right here, right now. But you can see this spreadsheet is dynamic, and we have 2025, Q3. So once all the dividends are in, and I update all the data tabs down here, I officially switch the quarter to the new one. And let's just walk through what we're doing here. We are considering 2 of our 3 dividend key metrics. We're not into total returns yet on this one, and that is where FDVV, the new contestant, has absolutely shined since inception. But what we do here is we have one column for yield, and we won't emphasize this too much. We really care about the growth. And now within dividend growth, we have quarter over quarter. So this is just a single quarter, quarter 3 this year, over last year's quarter 3. These will bounce all over. Every quarter we have a new hero, and you can see our hero this quarter. And then we have a 1-year CAGR, full trailing 12 over the 12 months before, a 3, 5, and 10-year dividend CAGR. And now for the average CAGR, we take the average of the 1, 3, 5, and 10-year. And in reality, we should probably give more weight to the 10-year. It's more important for your long-term cash flow, but I just average them because what have you done for me lately is kind of cool too. You'll notice that we keep quarter over quarter out of this formula area, and that's because it really bounces like crazy. We want a full legit year over year at different snapshots of time, not just a single quarter payment affecting our official scoreboard. And then with the dividend power, you can see we have an emphasis on the growth rate. As we look, we take the average CAGR, which in the case of FDVV, for example, is 12.25 plus the yield. So we give a little love for the yield, but of course, these numbers should be bigger than these numbers, although in VYM's case, ouch. So every quarter, we crown a champion based on the dividend power. That's the yield plus the average CAGR. And this quarter, you can see it is FDVV. And our historic champion, who has done much better, it has fallen from grace a little on this actual number, is SCHD. And for a little show of that, let me show off my dynamic stuff here. Last quarter, it was 13.5, and quarter 1, it was 16.42. So we've been on the downslide here, but we're in quarter 3 and this is what it is. And we see that VIG came in at 8.5, and of course it has a lower yield, but it makes up for it with its higher average CAGR of nearly 7%. DGRO with a slightly higher yield had a lower CAGR, so it came in just behind VIG, and they're always battling for second and third every single video. And then VYM, I want to say it's always been in last, although it did get a little better last quarter or 2 quarters ago, and I know I just showed it, and maybe it wasn't last place, but historically it's usually last. It does get a little higher yield at 2.5, but that average CAGR really slows it down. And you can see here, let's just give a shout out to FDVV. Yes, it's only 1 quarter over 1 quarter, but in a quarter where everything struggled, we had SCHD and VIG going up 3.5%, DGRO just plummeting 8.5%, and VYM staying about steady. FDVV was able to raise the Q3 dividend by 26%. That's incredible. And it's not overly fluky because the 1-year trailing dividend is a solid 22%. And I really should sort by these columns. Oh, they might have actually been in order, ironically. But you can see FDVV, 22%, SCHD down to just under 6%. That's pretty bad. But all these guys, VIG, only 4%, DGRO flat, and VYM down 3% in the last year. It's been a rough trailing 12. Now, when we zoom out to the 3-year, and wow, these are still in order, I just realized. FDVV, nearly 10%. That's incredible. SCHD, the lowest I've seen it in a while, at just under 8%. VIG just over 7 in 3rd place. DGRO struggling a little bit here, under 7. And then VYM, they're at 3. Okay, this is incredible. Just so you guys know, I sort by the columns as I'm talking here. I'm always just kind of clicking around at things. They are still in perfect order at the 5-year CAGR. So man, this is a definitive quarter. We have 10.4% for FDVV. SCHD is right there at 10.4. VIG right there at about 10. And then DGRO just under 7. And VYM at 4. Come on, give us a change here. There we go. I promise this thing's dynamic. I'm not lying. Over the last 10 years, SCHD is at 10.4%. DGRO actually does outperform its brother VIG. Call them brothers because they're always fighting. At 9% to 7%. Interesting. Now, FDVV, you'll see a note. This is an 8-year CAGR. It's the most we can grab. Is at a very solid 7% on the 8-year CAGR. Cannot do 10 years yet. You need a full 12 over a full 12. And then VYM comes in at 5%. A little more respectable than its other ones, but not great. That's how we establish the average CAGRs here, the 1 through 10 year. I want to jump over just so you don't think I'm throwing shade just for the sake of it. This is FDVV's data tab, and what you have here is a 1-year CAGR at every point in time, a 3-year CAGR at the time and every point in time, 5-year and 10-year. And again, the 10-year, we have a 7-year for these, and you can see it's the first year the trailing 12 was available as I scroll up. And then we finally, this quarter, we got 8 years. So I was able to chunk it up 12 years and then add the 8 into the formula on the rate of return. So now we're almost legit to 10, but we're going to slowly get there. But you can see, I wasn't just throwing shade just for the sake of being that guy. As you look at these historical 1, 3, and 5 year CAGRs, and even down here on the 7s and 8s, it hasn't been great all the time. It's very all over the map, and just recently did the 5 year just go ham, and the 1 year, look at some of these years, you were really down in the dumps. And I'm not saying that FDVV is bad because of that on the growth rate. I am just saying it's very undefined. The jury is still out on this, and you guys know how I like to roll. I made a very rare exception for adding this guy to the mix. I usually require a hard 10, but just for perspective, get these numbers in your head a little. Here's SCHD's history. It has struggled lately. You can see it's 1 year, 3 year, 5 year, 10 year. Not doing great, but look at this. Look at this 5 year history. Look at this 10 year. I used to have an all. I got some errors. I need to fix my data. The all is 1.11, by the way, CAGR since inception. I have it on my other spreadsheet. But then the 3 year, I mean, just look at this. And even the 1 year. So that is just showing that the methodology of SCHD truly is built for dividend growth. Now, again, I'm not saying it's the best. We'll see on total return. It's actually been abysmal lately, even though it historically was better than the other 3 in its first 11 years. This is something that retirees living on cash flow care about. This thing has never paid less than the year before. All right, we couldn't get through this video without at least taking a glance at total returns, because this stuff really does matter. It is that third key metric. You don't want something that's just severely underperforming for long periods of time, even though it's kicking out dividends. And we'll talk about that when we get to the 10 year. But zooming in as much as possible, you can see that we have our 5 same contestants here, and it is set to total return. So you want to include dividends, and you can ignore this VGT up here. That's just my bookmark, so don't worry about that. But we have FDVV, VIG, and DGRO. We always put the troublemakers next to each other. And then SCHD and VYM, we always put the higher yield defensive ones next to each other. And I will say FDVV actually has a higher yield than VYM and a good dividend growth rate. And it's been price appreciating better than the 2 growers. So I don't know where this guy fits in yet. Right now, it's looking like a superstar that I legitimately might own at its 10-year mark. But for now, I just stuck it right here at the front because I think it's been the best. I haven't looked at this yet. I do these live with you guys every single quarter. I think it keeps the commentary more fresh. So we're zooming in at first on year to date, and it looks like FDVV does take the crown. We basically have a 3-way tie for second and an SCHD that just seems to be broken lately. Zoom it out 1 year, it should be the same story, and it is. FDVV is winning still. VYM has just been a beast lately, and that's really cool to see. SCHD, I'm just embarrassed for you there, brother. Coming way deep in that caboose. Wait, in that caboose? Yeah, you know what I mean. And then VIG and DGRO, just battling like they always do there at just over 10%. And now zoom it out 3 years, goodness gracious, 85.8. I guess 26% tech and a lot of overlap with VU, but still, this thing's a monster. And then you have the 2 bros fighting it out. VIG is actually currently ahead of the 3 year. These genuinely flip-flop all the time. At 66 to 64, SCHD appears to be stuck in reverse at 37, and VYM right there just behind the 2 bros at 62. The 5 year, wow, FDVV 137, taking the crown again with ease. And then you have VYM at 102, actually beating the 2 dividend growth plays, which are DGRO at 91. It beat up on VIG a little there at 84. And sad SCHD is still at 75. A little better, but nothing to write home about. And when we zoom it out 10 years, just zoom her on out and see what happens. Oh, I'm sorry. FDVV can't be in this one. It's still ahead of the defensive guys, which is kind of funny. But you can see down here, it's the orange bar. I don't like comparing apples to oranges. It's not 10 years old. Actually, we'll do since its inception next. I'm going to leave it here, but just ignore that. Still very solid considering this isn't 10 years. VIG takes the crown just barely on the total returns at 237 to 235 over DGRO. SCHD is still better than VYM over the last 10 years at 197 to 190. Think what that says about SCHD early on, considering VYM's won the last 5. And when you keep zooming out, SCHD, again, I always mention this, total return monster for 11 years. Whooped voo. So I put more weight in that long-term methodology than I do in this short-term skid, but I guess that's up for each investor. I say buy low. With FDVV, I don't even know what to say. Let's see, 9/12/2016. I'll be right back. So I put this thing to FDVV's inception date. Oh, and it's actually almost 10 years old. Oh, that's right, because I need the full 12 for the keggers. That's why we just hit 8. So this thing's only a year away from its 10th birthday. That's actually exciting for me, because then we can do apples to apples on that stuff. But it is the champion since its inception, 206%. Ooh, to VIG's 205 and DGRO's 203. So we, close to a 3-way tie. SCHD takes a step down. These defensive ETFs have in this growth bull run. Not to keep making excuses for them, but it is what it is. We know it's been the 3rd largest growth run in the market's history at 162 to 157. So just better than VYM. But yep, FDVV very narrowly takes the crown since inception. And it recently took the growth lead. So right here, right now, it's a pretty good play. What happens in the future? I don't know. But as always, past performance is only one piece of the puzzle. It is important and commonly underrated, but what also matters is how these ETFs fit into your specific overall portfolio. Closing thoughts. I genuinely think that all 5 of these ETFs can be great for your portfolio. If you already hold a lot of growth ETFs like QQQ, SCHG, VGT, or some other favorites, then I remain steadfast that SCHD is the best counterbalance. But if you're light on growth and you want more VOO-like base holdings, then FDVV, VIG, or DGRO might be the better fit. And VYM is pretty solid everywhere as a defensive play. The best fit for you depends on how you build your portfolio. But the key to all of this is to stick to your system in good and bad times. Don't give in to the emotions that push you to sell low and buy high. Remember, be fearful when others are greedy and greedy when others are fearful. That's easy to say, but hard to do. But if you can pull it off, you will win big long term. And speaking of big winners, a huge new member shout out to just listed San Diego. I appreciate you joining the channel membership, and it really does keep me inspired and make videos like this possible. And thank you to all you awesome members that have been here all along. Your extra support really does go a long way to keep me making these videos and to just make it fun. Something we can experience together. I really do appreciate you all. And check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.